Hey, what's going on, guys? It's Nick here from Ways to Wealth. Thank you for tuning in. It's week 19 of the market recap, and if this is your first time here, we highlight key events that happened over the past week in the stock market. So make sure you subscribe, make sure you hit that notification bell so you don't miss out. On this episode, we're going to be talking about the Nasdaq and it gaining into positive territory. We're going to be talking about the China-US trade relations. And to cap it off, we're going to be talking about Canada's new #1 publicly traded company, Shopify. All right, let's get right into it. Only a month after the market has experienced one of the quickest declines it has ever experienced, we've seen the Nasdaq charge into positive territory. The Nasdaq 100 consists of companies like Alphabet, Amazon, Tesla, and these are all the companies that are winning right now. In late February, the Nasdaq was leading its rival indexes, gaining 10% on the year. Following suit, dropping to about -25 at the end of March. Now what you can see is that from that March point till now, the Nasdaq is outperforming, climbing back to positive territory after just a month. These tech companies are holding up many indexes, and this could arguably be attributed to the Millennial Investor. TD Ameritrade did a study in 2018, and they found that 50% of the millennials that they studied were invested in equities. Now, that might not seem like a lot, but in the grand scheme of things, that's 36 million investors. And the companies that they're looking for are the Googles, they're the Teslas, they're the Facebooks, they're all of these companies that are in the Nasdaq, and that is why we've seen them outperform since that March period. Now, coupled with the low commission or zero commission brokers like QUESTRADE or Robinhood, we've seen the stigma of investing is for the rich kind of decline. People are now able to put smaller amounts of their money into the market. If you want to play the Nasdaq on the US stock exchange, you can look at an ETF and research that more. That's QQQ. And if you want to play it on the Canadian side of things, there's a BMO product and the ticker is ZQQ. Next up, we saw US-China trade talks reappear after Trump shared his disappointment with how the Chinese and their lack of living up to the commitment that they promised with the Phase 1 deal. Now, if you remember, the Phase 1 deal was signed earlier this year. It created a sense of positivity in the market, and it ended an 18-month-long trade war. The cause for concern stems from the fact that there's a lack of American exports that are leaving destined to China. A part of the Phase 1 deal, China pledged to have over $200 billion of farm and manufacturing goods along with energy and services import from America. We'll look at a chart here and we can see that in 2020 the orange portion of this bar indicates the total dollar amount of export to date, and the gray indicates where the expectation lies. With almost half of the year done and gone, it seems extremely unlikely that this will be achieved. But why is this an issue all of a sudden? It'll be interesting to see updates from Donald Trump in the upcoming week. And last but not least, the largest publicly traded company in Canada is now Shopify, overtaking RBC this week after reporting in Q1. Earnings were great. They had 47% growth in revenue year over year, boasting investor confidence and shooting the market cap to over 121 billion. They are now Canada's largest publicly traded by market cap. Let's look at a comparison between the seasoned veteran RBC and the newcomer Shopify. Now, besides the fact that the 16-year-old company has achieved great success in a short period of time, the key stat that I want to draw your attention to is the PE ratio. And the PE ratio for Shopify is 4,486 compared to the 10 of RBC. This to me screams overvalued. Now, this isn't the first time that RBC has been overtaken on the TSX as the most valuable company. It's happened a few times over the past 20 years, and it's considered to be a curse. The most recent company that overtook RBC was Valeant Pharmaceuticals. Does that ring a bell? Valeant has since been renamed Bosch Health Companies. It's under new management. It has a totally different ticker symbol. But at the peak in 2015, it traded on the TSX for about $325 per share in 2015. Its unhealthy business and accounting tactics that were being used to inflate company profit eventually led to its demise, only a year later trading for $41 per share. The company before that, Research in Motion. You might better know them as BlackBerry, the original inventors of the smartphone. They surpassed RBC, but you probably know best. Their lack of innovation caused them to lose a lot of business, people switching over to different smartphones, more competition. They had to redevelop their business plan. As of last year, they no longer put out any smartphones, and they're moving into automated technology. A third example of a company that surpassed RBC in valuation on the TSX is the infamous Nortel networks. Now, if you're not familiar with them, they provided phone solutions around the world, and they were able to get a market cap as high as $366 billion, to the point that they took up 35% of the TSX benchmark. This shortly all came down later with the tech wreck. Eventually, in 2009, they filed for bankruptcy. They've liquidated, and they'll never be seen again. So if history repeats itself, it doesn't look too good for Shopify. But what I can say is the company started off targeting people that were drop shippers, people that wanted to advertise online, Facebook, Google, and drop ship their products directly from China into their customers' hands. Since then, they've tried to find a higher niche of client. They're going to small to medium sized customers with brick and mortar locations, with no e-commerce, no online platform, and trying to be their online solution. They've also tried to go to some of the bigger players like Nike, Adidas, and trying to get their online e-commerce business. So it'll be interesting to see how this plays out. It's definitely the way that the market's going. So I definitely believe that they're first to market, and they're put themselves in a great place moving forward. That's all for this week in the market recap. If you like the video, smash the thumbs up button. It'll help me grow. Please subscribe if you haven't already. We do this every single week. I got Instagram. Follow me there for some motivational quotes and some charts. Have a great week on the market. Happy trading.